Hey, I'm Scott Cole from whentobuyandSellStocks.com, and I also have a day trading site called BestDayTradingStocks.com. But I wanted to give my weekly commentary after Friday's trading action. We had a employment report out today and showed some decent gains in the jobs market, according to the government. Gallup also has come out with statistics this week that suggest that maybe things aren't quite as good as what the government says, but that's subject for another debate. In any event, I've got a chart of the S&P 500, and as you can see, we have rallied the last 3 days after our 200-point drop in the Dow on Tuesday. And so what does all this mean? What I want to point out is that we failed to make very good gains at all today. The volume was basically the same as yesterday, but I want to point out at the bottom, this taller red line is Tuesday's trading. That was the 200-point drop. Since then we rallied, and you can see that the trend in the volume is actually down for the last 3 days. Also, the biggest volume trading day going back for the entire year so far, going back to mid-December, is this day here, which was February 29th, the last trading day of February. And that was a distribution day because that day the market traded higher and then closed lower. So we've got some signs that suggest that the market should probably head lower. So we're looking at testing the February 29 highs. The closing high was on March 1st. 1374. We closed at 1370 and change today, and we'll see where we go. This coming trading week is going to be an important week. We now are going to have an opportunity to digest what's going on in Greece as far as their debt restructuring. Apparently that has been taken care of this week and allows them to kick the can a little further down the road. And we've got some other stuff going on, and we'll see where we can go from here. It is quite possible we could put in a double top here. If you look at the Dow Jones Industrials, the pattern looks more like a potential head and shoulders top here. The Dow is a little bit further below its peak compared to the S&P. And today it barely eked out a gain, and I would suggest that it would look to me, based on this trading pattern, where we've had a rally for 3 days, the volume is shrinking, and the trading range has narrowed. That's a sign to me that we could get a pullback on Monday or Tuesday. So I wouldn't be surprised if we have a narrow range rally on Monday again. I'd be surprised if we rallied hard from here. I wouldn't be surprised to see a sell-off. The neckline would be here at about 12,750. There's your left shoulder, head, potential right shoulder. If we break through 12,750, technicians would plot the target down about 300 points from 12,750, which would be about 12,450. No real support there. There's going to be support actually going back through this entire rally. So I'm not a big believer of projecting prices based on patterns. If it's broken, it's broken. If not, actually a head and shoulders pattern can also turn into a nice continuation pattern too if we tested this low at 12,750 and then broke that peak at about 12,900. So keep your eye on that pattern. Let's have a look at some of these other charts. Transports, they're still well below their peak. Somewhat similar trading pattern to the Dow. Let's have a look at the NASDAQ. NASDAQ's already testing its high. The interesting thing about the NASDAQ is it's not doing it so much with Apple. Apple looks like it's struggling to make further gains from here as well, so we might get a pullback there. And that kind of mimicked the pattern in the Dow, except obviously at a much higher level. The best performer of the day for the second day in a row is the Russell 2000. Now that had been the underperformer, so it looked like some of the money was starting to flow back into there, just on more of a speculative kind of buying there, suggesting that the leadership was trying to shift back to small stocks. When you kind of see that action going on away from the leaders into the laggards, that's also suggestive of a potential top. So let's have a look at the VIX. The VIX was down again today. It's testing its lower levels in February. Could quite easily go even further lower. Back in April we were down in the 14 level. Right now we're in the 17 level. And the short-term traders index today, not sure we have an accurate reading on that. It does not appear that I got an accurate reading on that from my service, and I might not get that until later in the weekend. In any event, that's kind of where we're at. I think the next couple days will be important trading days. If the market can find a way to resume the upside, that would be bullish. If it retests the lows, let's just look at the S&P 500 again. If we somehow find a way to test those lows at about 1340 again and go through those, that's going to be bearish. That would suggest to me we're in an intermediate term correction, and only time will tell. So be on your toes. What I can say is I'm finding that a lot of these high momentum stocks that I've been following, some have rolled over, and others are really struggling to make gains at higher levels right now. And we will see what's going on next week, so stay tuned, and we'll see you in some more videos.